Hey. Good morning. Hang on. I had to use my old setup. So, discombobulated. Where's the chat? Sorry, guys. I had to log in with my old setup, my old OBS, and I haven't used it in so long. And now I can't see the chat. Studio mode. Maybe? Nope. All right, hang on. I got to figure this out. Why doesn't it? Profile view. Wow. All right, so I'm going to have to pull up. I'm going to have to pull up the chat. But anyways, good morning. We'll get this done. Just please bear with me. Just got to find the chat. FX Street. Guess I just got to log into the webinar room to see the chat. $153rd. Wow, 153rd, huh? Sounds legit. All right, log in to enter. Wayne McDonell, Traders Way. I'm in the right place. I got to log in. It's going to be so good. Can't wait to see the chat room. Join now. All right. Oh, I have to accept. I accept. All right, there we go. That's me there. Very cool. All right. So I think I can grab that chat as well. I think I'm going to do that. Hang on, I'm almost there. I'm almost there, guys. Hang on. Oh man, this is going to be so good. I finally got it set up. Let's see, it's loading. There we go. Hello from Brazil, Marina, everybody. Hello from Malaysia. All right, good morning. Good. So we got everything. So, hey, let's start out this way. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, so we got sound, right? Yeah, just the disclaimer, that's all right. Oh, good. Hello from Boston. Hey, Marvin. All right. There we go. Hey, good morning. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange trading brokerage firm that wants to earn your loyalty and respect. We have fast execution speed. We have world-class customer service and support and education and training and competitive spreads. It's your way, a trader's way, Trader Wayne. So, hey, good morning. Trade non-farm payrolls 153, eh? Oh, for sure. Hang on. I don't think that's, is that the right stream? I don't think that's the right stream coming up on that area. Oh, no, I guess it is. Cool. I guess we haven't changed it since the last NFP. Cool. Oh, you need some charts. Charts. Where'd my charts go? Where are my charts? Nope, that's a browser. That's not a chart. There we go. Over here. Oh, okay, cool. Boom. See? Oh, you're from South Africa? Sharp. Jumbo. Cool. You look beautiful today. Well, thank you very much. This is my fancy shirt. I put on a fancy shirt for you guys. All right, so let's get on with it. So what's going down today? We got this thing called non-farm payrolls. And no, NFP hasn't been around for 153 months. This webinar has been around for 153 months. How cool is that? 153 months I've been doing this webinar for FX Street. And that means I've been doing events. I'm working with FX Street for over 13 years. Pretty cool, huh? FX Street was a small, young website. It was by far the best Forex website at the time, and it still is, of course. But even back then, it was very young. It was only a few years old. I was a trader trying to find a community, and that's why I started teaching and training, because after I quit my job as a venture capitalist, literally like 3 months earlier, I got promoted to vice president of the firm. Our company had about 300 employees. We just took over 2 entire floors of a skyscraper in San Francisco with a view of the San Francisco Bay Bridge. And right next door to us was the San Francisco Fed, like literally next door. And I was on top of the world, quite literally. 3 windows in my office with that gorgeous view. Everything was really cool, except I had already fallen in love with Forex and had been messing around with it for about a year and getting more and more serious. And so I quit my job, even though it was a job that I worked towards for about 10 years. I always wanted to be a venture capitalist. And suddenly I'm doing the job I loved. And it was a really cool job, like incredibly cool. I was the one that would listen to elevator pitches from entrepreneurs, and then every single day I had 5 folders. These were so my assistant would interview people and gather all the documentation and stuff. So I would come to work in the morning. I'd have 5 folders on my desk. Those were my 5 meetings for the day, and inside were patents and all kinds of other material related to some project, right? And then I'd interview entrepreneurs, and they'd give me their pitch, and if I liked them, I would fly them out, and if they had prototypes, they'd bring them, and I would interview them, and I'd bring in experts and engineers and marketing experts, and we'd talk about that, and then I'd take it to my PhD guys. We had a research department that would do their research, and and we're doing all this great stuff, and eventually, if I liked it, I'd take it to my review board, and then I'd pitch it, bringing it in. Now I'm selling the entrepreneur to my own firm. Really, really cool. And if we took it on board, awesome stuff. And then we actually put it in the market, and just amazing. So I quit. I quit a job like that. Can you imagine getting paid to do that? Now, why would I quit my job as a venture capitalist? I spent 10 years working toward it. Wayne Shark Tank. Yeah, this was way before that. But anyways, yeah, I mean, really, that's what it was. Why would I quit that? I had fallen in love with Forex, but I got to the point where I hadn't achieved the level of success I wanted in Forex because I had a job. I loved my job, and Forex was being a distraction. It got to the point where I had one eye on the market, one eye on my job, and I realized I had to make a choice. Red pill, blue pill. Which one do I take? So I quit. Hey, thanks for the promotion. I'm out of here. So anyway, so there I am working from 10 o'clock at night to 10 o'clock in the morning in California time, doing Forex. And several months have go by, and all of a sudden, my performance started to wane, if I may. And I realized very quickly once I asked myself, like, what am I doing wrong, and where have I been successful in the past, and what have I done, and all that kind of stuff. And I realized right away being alone was a serious risk, right? Like literally a risk to my trading, where in the past when I was successful, I surrounded myself with other like-minded people, right? Like-minded driven people. So that's how I kind of got into teaching and training and stuff, because at that time there wasn't, like live trading rooms and stuff. So I just went out and said, well, if I shared everything I learned, I can develop a community or whatever. And then I ran into FX Street, and the rest is history, right? I'm a biomedical engineer, finishing a PhD. Right on. Yeah. Well, finish the degree first, Marina. But anyways, we've all had to make a choice, right? And I think the one common denominator probably with all of us here today is that we have some sort of entrepreneurial spirit, and we're willing to accept risk for some reason, and that I suppose that common thread is a good thing. Yet entrepreneurs' willingness to accept risk is actually quite different from, truly big institutional investors. Those guys are not entrepreneurial at all. They're just mathematicians. It's just numbers, right? They're not going to take a risk unless they make money, right? And yet, as young entrepreneurs / traders, for some reason we accept losses, but consider it cost of doing business, and to a professional investor that's not the same, right? Right. So we have to harness that entrepreneurial spirit in a way that we keep going, we keep pushing forward, especially when you go through a dark period and you're staring into the abyss and you wonder if you should jump in and just quit this thing called Forex because it's too hard and it's too painful and all that. So the entrepreneurial spirit needs to carry us above that, because, to succeed, you have to have perseverance. Especially as an entrepreneur, you have to have perseverance, right? But then the risk part is the part that we have to tame. That's the big thing. So anyways, today we got non-farm payrolls. That's great. That number's going to come out. We also have Jerome Powell, Jay Powell, the head of the Federal Reserve Bank of the world. And there's some sort of speech today, right? It's not even a speech. Is it like a panel discussion with a whole bunch of them? Like there's something going on somewhere with these Fed dudes. And, you wouldn't expect Powell to say anything, but what if he says something? What if it's interpreted that he says something? So if somebody can Google that and tell me what time that risk event might occur, I'd appreciate it. Hey, Donald. Donald the Lion. Cool. So anyways, thank you to FX Street for hosting me 153 times. To give you an idea, my first few events before doing this webinar, I would actually type. It was just, imagine a chat event. There was no video, there was no screens, it was just chat. That's how far back my relationship goes with FX Street. And when I first did Non-Farm Payrolls Live, I sat down with the leadership of FX Street and we said, I said, well, I don't want to do just another event. Because at the time, even a webinar, it was somebody with a PowerPoint presentation. And they're like, this is a moving average. This is a MACD. Look how awesome I am as a trader in this perfect world where everything matches because it's all PowerPoint. I said, look, I don't want to do that. I want to do something live. I want to do something real market. I want something imperfect and messy. And then also, I'm trying to get people away from scumbags and scam artists because back in the day, 15 years ago, there was a lot of that going on, a lot of get rich quick kind of stuff. There's a lot less now. It's still out there. There's still lots of stuff on YouTube about, look, I got my cell phone. I just made enough money to buy myself a yellow Lamborghini. Look at how awesome I am. And it's such a childish thing, but somehow it really works, right? Somehow it just works. So back then I said, look, I want to do something that will really attract people, but more importantly, that will help people. Something where I can spend not just 20 minutes or an hour talking and 5 minutes taking questions. I want to spend time like really in the live market, going through a live high volatility event, teaching as we go in the live market, no PowerPoint. And by the way, this had never been done before. And on top of that, non-farm payrolls is often fodder for those that are pitching, the get rich quick stuff because, the market moves. Well, back then it moved 300 pips in a second. Now it'll probably move 35, 40, 50 pips, right? So it's a lot less crazy than it used to be. But if people were with me, then they couldn't be with the scumbags and scam artists, right? So I said, look, it's perfect. We kind of double win here. I get to teach people, like really teach people, and they can't be with those other scams, right? So let's do it around non-farm payrolls, and let's not just make it an hour. Let's make it 3 hours. Thank you, Charlie. Right? 10:15, joint discussion with former chair Yellen. Cool. Bernanke. Yeah, see, it's really cool, right? How cool is that? Isn't it in Atlanta? Yeah, in Atlanta. I should be there. I just drove by the Atlanta Fed just maybe last weekend, and I told my wife, you know what, I need to go to these events, but I'm busy. But how cool is that? Yeah. So thank you, Mike. So 10:15, 10:30 time frame. So that's cool. That's actually as we wrap up. So we'll see what happens in there. So anyways, that's the history of this webinar, 153 months, so on and so forth. So thank you for being a part of that history with me. Croatia, huh? Very nice. Yeah, yelling and screaming's back, huh? Croatia, Tanzania, what wonderful places. I had an Uber driver just recently from that part of the world. I can't remember if it was Croatia or Serbia or somewhere in there, Herzegovina, I can't remember, but somewhere in there. And he was telling me the story where his dad was already gone fighting, I think, and an uncle or somebody came in and packed up, his mom and like a couple of younger brothers, and he was only like 9 at the time or something, and all the women, and they walked through the woods for like a week and a half with like hundreds of other people, not on the road, walking through the woods to get to some other border during the war. Just amazing. Right? And I met someone long ago. He was in California, and he told me his story. He and his family walked from El Salvador. Was it El Salvador? No, it wasn't El Salvador, but somewhere out there. Where was he from? Nicaragua, maybe? He walked from Nicaragua to California along the like with grandma and everything. I think grandma didn't make it, and they had to bury her out of but they walked from the top of the mountains. Like, wow. Anyways, all right, let's go back all the way back to the FX Bootcamp Credo. This is something that I've been, actually this came from a business planning retreat I did with myself long ago, probably near the beginning of this webinar, or maybe even early. It was earlier than that. But I did a business planning retreat with myself after I went through a tough period. It was a way to kind of get myself together and pull myself, out of that abyss, right? And I asked myself very basic questions and philosophical questions, but it's really important when you're doing something like a business plan to say, like, what's the reason for being, like, what is the purpose? It's important to ask these questions. And I really thought about it over a whole cigar, probably, just to do this one slide. Maybe this might have taken a day, thinking about what, as a currency trader, what is it that I do? Like, what is it that, I want to achieve today or this week or this year? What is my raison d'etre, my purpose in life and such, right? My reason for being. And it's interesting what came from that. And I thought I started through a military point of view because, I'm running FX Bootcamp, and that has a military theme because learning how to trade, it requires hard work and discipline, right? Sounds like bootcamp. And I thought, well, if I was in a war, how do I organize sort of my basic goals for the day, right? And I realized when you wake up in the morning in active combat, sure, you want the war to end, right? You wake up and you're like, is the war over? And you're like, dang it, no, the war is still on. The war seems to probably go on forever and ever and ever, right? So that can't be the number one goal. So then I thought, well, what is the goal? And of course, now then I think that your platoon leader shows up and you're like, get up, McDonell, we gotta go, pack your kit, we're out of here. You're like, oh, where are we going? Shut up, right? All right, yes, sir, yes, sir. But, so what are we doing that day or that moment? And that's, achieving. What's the mission, right? You have to always achieve the mission. We got to go. Keep pushing. Smith is dead. Well, we got to keep pushing. We have to achieve the mission. But I thought, okay, that's cool. Like, I get that. We have to achieve the mission and then the next to win the war. But that's not the most important thing when you wake up as a soldier in combat, I'm sure. I'm sure the first thought is, I hope I don't get killed today. And so I reverse engineered it, and I thought, well, as a trader, money is our product, money is our service. And yes, I want to make money today. That's really important. But even more important, I can't lose money. Because the math starts messing with you, right? If you lose 50% of your trading account, then you have to make 100% to get back to zero where you were. Back to break even. 100%. Well, what kind of person loses 50% but then makes 100%? That ain't going to happen. You see what I mean? So I'm like, well, more important than making money is not losing money. And that was such a huge change in thought process at that point, where I'm like, oh, wow. Today, the number one goal is not to lose money. And the way I got to that, too, was through math. So I did a 3-year pro forma cash flow analysis, day by day, using something I call minimal acceptable performance. And I used some math. And so I did performance coaching for myself. Okay? And it was grueling and rigorous. And it took me probably a week just even to do the spreadsheet and stuff. But I took myself through this, looking at my actual results and comparing it to my performance results and all these different things. And the first thing it does is it gives you, for me, because I did a 3-year, I could see 3 years into the future. And I never had that long-term point of view before. It was just like, I wake up in the morning, try to make as many pips as possible. Well, what's good? What's my goal? Well, as many as I can get. What's bad? Well, all of a sudden I realized there's no plan here. I'm just like a baby splashing in water. Today I made money, yesterday I lost some money, and but my gosh, right? You can't run a business like that. So all of a sudden I had a 3-year plan, and I did the numbers at first using my current leverage. And I realized in 3 years, I'd have $176 trillion in my account. Well, that's pretty good for 3 years, right? 176 trillion? And I said, oh, maybe I'm over leveraged. Aha! One of the most important things that probably have ever happened in my entire life. Probably over leveraged, because that's really more money than I was trying to get under these certain current market conditions, right? Right? Yeah, Russ. So I'm like, wow. So I lowered my lot size relative to my account size. Oh, that was so smart. And then something else dawned on me. Once I got my lot size all together, then I'm trying to, let's say, make a few million in the next 3 years, not a few trillion. So my lot size went down dramatically. And then I looked at it and something else dawned on me. Holy smokes. When you break it down to an average, and you have a sort of an average growth, your account is growing at a certain amount, and you're paying yourself a certain amount, and your account is growing by a certain amount, and therefore your lot size relative to your account size grows at a certain rate. That now you're playing the law of averages. You see what I mean? Now you have a number, a minimal acceptable performance. What do I have to do today? What do I have to do tomorrow? What's that average? What's the law of averages say? And it dawned on me, if I just had a boring average day every single day for the rest of my entire life, I'm going to hit that goal at the end of 3 years, and it's more than enough money. And it's like a radical moment in time. The earth shook, and the angels came out of the sky, Lord, and imparted with me this knowledge. I'm like, I'm enlightened. And holy smokes, did that change? Because now I never had to risk a lot of money and go in and go, holy smokes, I hope I make a lot of money today. Right? Like a poker player. I'm all in. And you have to stand up and you're like, whoa, please, right? Please. I didn't have to do that anymore. I realized I'd never have to risk any big money. I never need a big trade. I just have to be boring every day for the rest of my life. And then I'll hit my goals. And it took all this weight off me. It was so important. You can't imagine how important performance coaching is to get an idea of where you are, what your strengths and weaknesses are, where you're going, but also just to remove the burden that you carry on your shoulder. Holy smokes, was that important. So now I need to protect my money, because remember, if I don't lose money, I detract from, I deter myself from my destiny, which I've proven mathematically. So now this minimal acceptable performance this is the mission that I have to do every day. And it's something I can accomplish. I can practically with my eyes closed, right? Angel smoking cigars, right? So I'm like, this is amazing. I just have to achieve my minimal acceptable performance. Now, I'm going to try to make more, because that's going to pay for my days when I miss. So some days I'm going to lose money. Most days I'll make money. Some days will be very good. But I'll never have any horrible bad days because I go back to the first one. I'm not risking anything. I'm not going in big. I can't possibly lose a lot of money if I'm not taking on a lot of risk. Capital preservation, right? So then I go there. Now I just have to have my boring day. But you know what? If the market's good, I'll probably get some other opportunities. I'll do extra good, but that'll pay for my bad. And then at the end of the year, I just have my average, because let's say my big winning days pay for 2 or 3 losing days, and that all just washes out. So what's at the end of the year? A couple hundred boring days where I achieve my minimal acceptable performance. I just hit this boring average, but I get to pay myself just a certain amount, and the account size grows a little bit, and the lot size grows a little bit. And I hit my year-end goal this year, and then next year's even better, and the year after that, and it's just a series of unconsequential events. And I'm like, right? So once this capital appreciation, all I'm saying there is like, once I've had a decent day, but there's opportunity out there, yeah, go for it. Let your winners run. Because I also realized the whole secret to trading actually took me a lot longer. It took me many years to kind of figure this out too. And this is why these idiots on YouTube trading, and they're like, look at me, I'm in my yellow Lamborghini. Boom, I just made $1,000 just now. Boom, in 10 minutes. It's such a childish, nonsensical dream. Where's the message about work your ass off and get really good at what you do? Get yourself trained and educated so you know technical analysis and fundamental analysis and macroeconomics and central banking. Be like a professional, right? Right? It's almost like you should be working toward being the foreign exchange trader at Goldman Sachs, right? You should be none of this get rich quick stuff. You got to be like the smartest person in the room. But anyways, letting your winners run is that sort of the last thing where there's a difference between rich people have jobs, right? Rich people have a lot of money, but they have jobs. They have money, but they work for money. If someone gives you a paycheck, you're rich. If it's a big paycheck, right? If you trade every day where you make 15, 20 pips and take your trades off, 15 or 20 pips, take your trades off, 50 pips today, great, trade off. Then every single day you have to sit down, start your analysis over, make your trades, make your 50 pips, and then the next day start over, new analysis. And it's a job, right? Like it's work. You're sitting down every day and working. And what about the days when you're losing money? You work all day and lose money, right? Wealth comes from your money working for you. Wealth is like you own a company, and at the end of the year, all your employees have been working really hard. You've been paying them well. Maybe some of your employees are rich, and then you say, "Hey, that was a really good year, guys. High five." And then the board of directors goes, "Oh, here's your distribution, sir," and you just made $1 million, and you got your piece of the pie, but you didn't do anything. You just owned the company. And you're like, "Hey, thanks. That was great. That was great. Hey, thanks for the $1 million. I'm gonna put gas in my yacht," right? Owning real estate, for example. You own the building, the tenants pay the mortgage. The tenants pay the expenses. The tenants pay for the insurance. The tenants even, right? Eventually, while you're out of your net operating income, you're going to have to pay for things like, if you borrowed money, pay the mortgage, right? But at the end of the day, there's money left over and you're rich, boom. Or you hold it for so long, there's no mortgage, and over the 25 years you've earned it, the tenants have paid for all the expenses, paid off the mortgage for you, so now you don't own the bank. You've been making a couple of $100,000 a year because there's more income coming from the property than there is expenses. So it's like a job, except you don't do anything. And then now you're retired and you're like, I've owned this stupid building for 25 years. I think I'll sell it for $8 million. And boom, now you got an $8 million check. And now you're like, I got $8 million. That's wealth, not a job. You get it? Now, binary options is laughing. Well, I know your name is binary options, but like that was the one thing I never liked about binary options is two things. A, you don't get paid interest, and B, you can't earn wealth from it. It's just a trade, right? It's an option. It's sort of a bet, or I used to teach people how to hedge with it. But anyways, the last part of that is getting in good trades with better analysis, both longer-term technical analysis, longer-term and fundamental analysis. If you can get yourself into trades, that you can sit on for weeks or months, you earn interest in Forex and capital appreciation, right? And when you wake up in the morning, it's not like you're starting over again trying to figure out how you're going to make 25 pips today. You might already be up 100 pips and you haven't done anything. And that's where I want to get you guys one day. Now, there's lots of up and down markets, right? And some years are going to be better than others. And this is where you have to take yourself out of the here and now. What was 2018 like? There were times when it gave us great trades, and there was times when it took it back. 2018 doesn't have to be like 2019. In fact, based on macroeconomics, there certainly won't be. And the market conditions change. And some years will pay much better than others. But that's normal. And you won't see that unless you have the experience. And that's why you need to survive long enough to even learn that kind of stuff. But just food for thought out of the gate. Well, Michael says, Wayne avoids entering a trade until he sees the reaction after. Yeah, so we're going to get to that. So I'm going to show you what to do, okay, on how to do that. So I'm going to show you what to do. I will call out what might be happening, but you need to make your own decision with your own money, right? But I'm going to show you two ways, actually, on how to do that. I also wrote an article probably 3 or 4 years ago now at FX Street on how to prepare for and trade the employment situation report. So it's like, dude, if you don't know what to do here, I mean, I'm trying to teach and all that kind of stuff. I'm not going to put you into a trade. You have to listen and then make decisions for yourself. But it's not going to be like opaque, like, right? If you don't know what's going on, then you either need to listen better or you need to get better trained because there's something missing, okay? But anyways, there's the chart setup. I hope you took a screenshot. This is the 2155 EMA combination. I use these combinations to measure the speed of the market. So this just tells me the market is bearish. Now, the angle and separation between the two moving averages are also important. When they're wide, it tells me not only is the market bearish in this case over here, but it's extremely bearish. And then when they narrow, that tells me it's still technically bearish, but significantly less so. The speed of the bearish market is diminishing. Now, I used the 5 and the 8 to represent price, not the market. This was the market. Hey, what's the market? What was the market? How were the markets today? They were down. Okay, that doesn't tell you much, right? Now, price. Within that market, see, it's the same chart. This is price. The 5A cross down tells me to pull the trigger if I'm a bear. Well, you can see that if this was one day, I was a bear yesterday because the 21 is already below the 55, right? So when this day started, I get a 5A cross down. I would sell, so the 5A crossing down gives me if I want to sell in a bearish market. See, I don't want to buy in a bearish market. I want to sell. So I have to define the difference. Is this a bearish market? Yes or no? At the beginning, yes. Great. What's the next thing? This is price falling. Price, market. Price, market. I want to align the two. So 5A cross down. I'm selling in a falling market. 5A cross up. Take profit, get out. Not buy, take profit. This is This is bears buying, not bulls buying. Bears buying, okay? And then Braiding tells you to get out because nothing's happening, okay? 200 EMA is the fair market value. Bollinger Bands show you volatility, or you can substitute that for volume. Looks like we got a double, okay? And that's what a typical chart looks like without the moving averages. What I'm looking at here is if I have a MACD, I use the MACD to measure the overbought and oversold conditions for the market. And if I'm using stochastics, I'm using it to measure overbought and oversold conditions for price. So again, price, and market like the EMAs. I'm constantly separating price and market. And I'm even going to use price action to measure price forces. And I'm also going to use pivot points to measure market. Okay, that's price support and resistance, market support and resistance. Okay, so we'll go into that as well. Okay, NFP is going to come out. We're going to go through that trade. And then, probably around 9-ish, then I can take questions and we can go through anything that you want. Okay, I can cover technical analysis, fundamental analysis, and all that kind of stuff. So start thinking about questions, okay? You're the boss. I'm just a humble currency trader, okay? All right, so this is going to be a 1-minute chart, right? This is the new scalp, guys, so you have to pay attention because I'm not going to tell you to pull the trigger. I'm going to tell you how to do it now. You'll have to make decisions. Okay, great. So we're going to use a 1-minute chart, and these green candles represent NFP taking off for the first 2 or 3 minutes. Okay, and in this example, you can see the market reacted bullishly. Great. Did I trade before NFP? No. Did I trade instantly after? Like, oh, good news, buy. No. I'm going to let market participants tell me the direction, okay? And by the way, it's in that article that that our moderator just shared with us. There's 2 trade setups, this one and another one, which is this counter trend, okay? So anyways, this is the scalp. So in this case, 1, 2, 3, 4 minutes after NFP, green, 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 okay? And then what I'm looking for is the retracement, because the green only tells me that I want to buy, not that I care about the headline number. It's just that the market decided to be bullish. I'm responding to the market, not to the price or not to the number, okay? But I don't like to buy high. I want to buy low. So I'm looking for a retracement so that I can buy. I'm also generally looking for role reversals and stuff like that. So I'm going to look at this old resistance. Maybe it'll become support. I'm going to look at psych levels and fib levels and stuff. So when I'm in that situation, typically I will draw a fib, and it'll look like this. I'll try to draw that for you, and it may work, it may not, okay? And that's what I'm hoping for, is a 618, and that's when I really zoom in, and I'm trying to decide whether I should buy. In this case, it dropped to the 786, but then held, then held, then held. So this is not a perfect setup. I didn't want to give you a perfect setup. This is realistic. In this case, for 3 minutes it held. Somewhere in here you have to decide that you want to buy. And of course your stop just goes below the lowest low. So you're risking hardly anything in this. Okay? And the most important time to move your stop is when you get close to this line in the sand, which is the price that dropped the initial move. Okay? Because that's the hero or zero. When you get to this line, there's only really one of 2 things that will happen. We'll break, and this will make higher highs, or it drops, reverses, and falls way below this and goes down, 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 down. Because for some reason, like maybe the psych level of 149 was so important that it just prevented us. There's bears up there for whatever reason, okay? So if you bought down here, like I showed you, when you get to this line in the sand, move your stop at least to break even. Okay, you listening to me? Move your stop to break even here, because if you're going to lose money, it's going to lose money because you hit this and then drop. Or it gets to the edge and breaks out. Okay, that's why you want to move your stop to break even as you approach this line, because it's it's either hero if it breaks to the upside, or zero knocks you out at break even. Okay? So don't mess it up. Also, if you lose more than 25 pips, there's no way you listen to me, and I have no sympathy or empathy for you. Okay? And if you don't know what you're doing, if this does not make sense to you, please don't trade at all. Okay? If that's the case, please visit tradersway.com, open a trading account there. Even a demo is acceptable. And I do webinars every single day. Yesterday, my webinar was 2 hours long. The day before that, my webinar was 2 hours long. I did several webinars through the holidays. So that's free to clients. So please visit Traders Way if that's the case. All right? The other side of this trade, guys, is the counter trend, where we look at key levels of support and resistance above and below us, like key pivot point levels, for example. And wait for that move. No, you're wrong, Jimbo. Let me point it out this way. Overbought and oversold conditions mean the market is bullish. We're probably drifting into, let's say, resistance. And some of the bulls are taking profit, but no bears are selling. And these overbought and oversold conditions are telling you that the herd is thinning. Okay? So it's not that if it was ordered, it was bought. It's that some people are now taking profit, and that opens up vulnerability to the downside, because then if anyone does sell, it's going to trigger stops of other people that were long, and it tends to roll over in those situations when you're at key levels of resistance as a bull, or key levels, right? You basically take profit zones. Okay? So I know what you're saying, but you're missing my point, Jimbo. You're looking at it too mechanically. I dedicate, I think, 1 or 2 pages in my book describing how that happens and why that's so. All right, so let's, just for lack of anything else, let's use euro dollar here. So we know the 1 minute setup here. And then I have key levels of support and resistance already identified for us. You're welcome. What that means is, let me get my drawing tool going. Where it be? There's a balance of buyers, there's not in it. No. The indicator will show you that. Well, let's cover it. Let's cover it on Monday, Jimbo, or later today. Okay, let's cover it later today, Jimbo. Not 3 minutes before the news. All right, so there's this move. I don't think that's going to happen. So the counter trend move, guys, is if we get a big spike up to here, there's probably going to be a counter trend this way. If we get a big drop down to here, there'll probably be a counter trend this way. So the first move would be like news, retracement, move, retracement here, and then we might work our way back. Or vice versa, spike, drop, up, right, up into here, and then it thins out and comes back this way. So there's, okay, these are counter trend areas. And there'll probably be another above and another below. We'll do that at that time. I keep looking at the clock, by the way. Okay. And then there's the scalp, guys. The scalp might be boom, 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 reverse, 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 or boom, 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 reverse, reverse, reverse. Okay. So there's the spiky moves and then the counter trends. So OP says, buy USD CAD, trust me. Well, A, I don't know you, so I don't trust you. And B, I can take a look at it. But right now, I'm just dealing with this. Oh, right on, Michael. Yeah. Okay. I took offense to what you were saying, President. So I'm just going to. All right. So that's that. Notice we have a little bit of support in here. We have a little bit of resistance in there. That's why I think the price will need to bust through that. NFP has been quiet, though, the last few years, hasn't it? So let's move to like a 5. Oh, I guess I got to get into my 1-minute chart, right? Well, with that being said, let's mark the little support and resistance, just because I think it'll be hiccups along the way. And I'm going to move this one down. Okay, like, I think that's more fair. Yeah, we'll do it like that. Okay, and that may be important on a 1-minute level, but not on a higher time frame. So we have about 90 seconds. So again, thank you to FX Street for hosting us for Non-Farm Payrolls. 153 months in a row. 153 months. That's really cool. So thank you for the loyalty and respect you've shown to me over the last, 13 years. That's really cool. Thank you. I do appreciate that. And we'll go over oil and gold. We'll go over all the yen pairs and all the dollar pairs after the news comes out, guys. So keep asking good questions. Also, I do webinars like this, about an hour and a half every single day. So just come to tradersway.com and open an account. Tradersway.com. Oh! Mester says if inflation doesn't rise, Fed could stop hikes. Yeah, well, that goes without saying. Big number, huh? Okay, so we're at a monthly pivot. That's crazy. Fed's going to have to raise interest rates. Wow, huh? Whoa, wages going up. Wow. Oh, that's Canada. Sorry. Oh, no, Canada got in the way. Did I just pull up Canada? Average earnings. Yeah, no, that's right. Wages going up in the United States. Fed's going to have to raise probably 2, maybe 3 times. Boom, shalakalaka. So under this, the sweet spot based on what I shared with you earlier is in there. I'm going to move out, add a little more. Okay. You are now the loon. Let's kill this. 300, huh? Holy smokes. I suppose if you ever had to have a job, now would be the time to get one, huh? You just show up, put your feet on the desk. You're like, yeah, I have a bad back. I can't sit in the desk very long, so I'm only going to work maybe 8 hours a day, but I like long lunches. I'm going to come in late every day. How much vacation time will you give me? Oh, and by the way, I want way more than you normally pay. Oh, look at this, 618. Boop, boop. 618 right there. Bloop, 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 bloop. What do you stink? Oh. Did that just 618 us? Remember that line in the sand thing? Samir says, Algos, yeah, well, why not? What's the difference? It's just a 618 Fibonacci retracement. Okay, the next 2 or 3 minutes really matters whether this drops or not. Okay. Flatty, you're long? Did you buy at the pivot? That's crazy. Yeah. Wow, that's aggressive, Vladdy. You measured from the previous candle, so what? What does that even mean, Michael, right? I'm still in the trade. It came almost to my entry point. Oh, you were long before. Yeah. Wow. All right. Oh, I'm not going to answer that question. Should you hold it? Talk to your priest. Or your bartender, one of the two. This is critically important. This candle and the next candle. You got to get below here. Come on, Baba. Come on. Okay, last one. Come on, Baba. Come on. Come on now. There we go. Okay, remember, as you approach the red line, you should consider moving your stop closer or even to break even. So there's a high probability you break even, but this is a scalp. You're not supposed to be in a situation where you lose a lot of money. And if it breaks, you're going to get paid. So just don't worry about it. It's hero or zero. There's nothing important about it, right? No, of course, Donald, you're not worried about selling it. You're worried about moving your stop to break even. So I'm assuming you sold it here. I even did for like 30 seconds. And then I drew the little thing there, blah, 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 blah. So, yeah, so this is it. This is where it's going to fail. It's playing off this wick. So if your stop was above this, I'd even move it closer. Like the worst case scenario is what? You break even? Who cares? So if your original stop was, let's say, here, I would now move it closer. Come on, it won't grab it. There you go. I'd move it closer just because this is where it's going to wimp out. If it's going to wimp out, so I'd put it there. You're risking 8 pips or something. Well, Ed says, intelligent, right? That the market might wait for Powell's speech today. The thing is, we don't need Powell's speech. The economy is still adding 300,000 jobs, which means now the amount of jobs available significantly outstrips the amount of workers that are available. And I described maybe 2 months ago the COLA report, which for the first time since World War II, there's a massive mismatch between the type of jobs available and the type of workers available. The workers just don't even have the skills. All right? Most people don't know nanotechnology or artificial intelligence. So like, for example, one of my friends, you know, she's my age, right? So she's got 25 years of experience. She just went back to school at Stanford and learned artificial intelligence. And then literally the same day got hired by Apple. She worked at Cisco Systems for probably close to 20 years. She worked at Netscape and then she worked at Cisco Systems for many years. And then got the AI degree and the same day hired to do artificial intelligence for Apple, just like boom. Just like that, just boom, like no real world experience, just took a bunch of classes, got the paper, boom, you're hired, you're in. So there's a mismatch. Not everybody knows artificial intelligence, but if you know artificial intelligence, you got a job now, okay? But most people are not that smart. Most people are also lazy. So anyways, there's sort of the COLA, and I forget what COLA stands for, but it's something that the Fed does, right? So not only is there a lot of jobs, but we don't have the right type of workers. And the most important thing that I saw so far is in that jobs report, wages went up significantly. And that's what's telling us the Fed's going to raise interest rates. And then lastly, I want to make a point. We're at the neutral, right? And I did this yesterday at Traders Way. So again, if you visit tradersway.com and open an account, I can work with you every single day for free. Okay, but we were talking about the neutral rate. So we have inflation. The Fed's trying to get to neutral, right? So inflation has to equal the interest rate. The interest rate has to equal inflation. We'll make inflation big I, interest rate little I. All right, so what the Fed's trying to do is match this so that real interest rates, I was thinking, how do I mark it? So a little I, we'll do it underscore. Okay, real interest rate should equal 0. So you simply look at inflation and make interest rates the same as inflation. So we had 3%, and then we went to 2.5%, or no, we're going to be at 2.5%. Actually 2.4, but we'll put 2.5, okay? And so, yes, inflation is falling relative to the recent past, but it's still growing. So what I'm trying to say is inflation, along with growth, if you want to count this, so I'm sort of mixing CPI, PCE, which are measures of inflation over a basket, but also I'm mixing in some GDP because if you have growth, you're most likely to get some level of inflation, right? So anyways, there's some sort of growth, there's economic activity, all that kind of stuff. And so if inflation's a moving target, it's still going up. Even if it's slowing down, it's still going up. So the interest rate will have to go up too. Okay? Now, the rate of this change is also important, or the slope of the curve and all that kind of stuff. It gets complicated. Remember, I was taught macroeconomics by someone that works at the Boston Fed. Still works there, senior economist. But anyways, so that's a moving target. But what is the wages? So I think we were at 2.9, right? And wages were expected to go to 3.0, but they came out 3.2. Growth in wages. People are making more money. Probably because of the scarcity of jobs. Now, of course, people without skills, they're not making more money. But I bet you my friend that went back to Stanford University, got a degree in artificial intelligence, and got hired by Apple Computer the same day she was done, I bet you she got more than fair compensation. Probably more than 3.2%. That's called real world economics, right? So anyways, wage growth, so wages, if wages going up, the marginal propensity to consume says that this new money, right? So you used to make this much money, now you make that much money. So you take this difference, right? So 1 minus whatever, old wages, right? You're going to take this much, and you're probably going to spend at least 75% of that. Probably closer to 80. And the other 20 goes to savings or something, right? So that money gets spent, which means increase in demand for consumption, right? GDP equals government plus consumers plus investment plus imports minus exports, right? That's GDP. Consumption goes up, GDP goes up, right? If consumption goes up, it raises prices, aka Big I, which means, going back to what I just shared with you, matching, right? If Big I now is expected to go up because of what we just saw, then little I goes up, and the Fed raises one more time in 2019 than what was expected. So now you can go to the Fed Watch tool, look at the negotiations in the money market, and find out if interest rates are expected to go up in the future. Does that make sense? Patrick says cost of living adjustment, not that big. Going from 2.9 to 3.2 is ginormous. That's probably the biggest change we've seen in 20 years, I guess. I don't know. We'll have to listen to the news people. But anyways, I hope you're okay with me pulling out economics on you. Did anybody like that? Some of you hate it. I know. You're like, Wayne, just tell me what to do, pull the trigger. But I hope you don't mind a little Harvard economics. Yeah, Michael, yeah. But you know that and I know that, but we don't have to go into that today. Yeah. Okay. We're approaching. Move your stop to break even. You should be hero or zero. Well job, everybody. Well job, everybody. Good job, everybody. Well done. We love economics. Yeah. I preach to teach because some of you never had this. Okay, it feels like a break even to me, but the Fed should raise interest rates. The market has all permission in the world to buy dollar based on that because the expected interest rate is higher now, so that should attract dollar strength. But and don't forget, what's the next part of our plan if things go well? Down, up, down, and then what? Look for a role reversal, huh? So bulls, just bide your time. Just wait for your op. What's plan B for bulls? We got to go farther out than a 1 minute chart for that. Plan B for bulls. So this is plan A as we did before the news. Plan A would be this. Plan B would be this for bulls. Okay? Plan A, plan B. And bears are taking it down. This is a take profit zone. You know what? But if there's, you have to get out here. Let's say you get lucky. I doubt it's going to go that smoothly. But let's just say because it's such good news, it stays incredibly bearish all day. And if you find yourself down here, you have to get out, or you will be punished. Right? John Seed will cleanse you. Aliyu says, now that NFP came out positive, as I just explained, does that mean the dollar will continue to be bullish for some time? It can be. It can be. Okay? But it doesn't have to be. And this kind of messes things up for a lot of people, right? Because just yesterday was the end of the world, right? Oh my God, Apple doesn't sell $1,000 cell phones in China anymore. It's all over. It's the end of the world. The market's going to crash. We're all going to live in caves. Maybe people just don't want their stupid $1,000 phones. You will be punished. So anyways, the economy was crashing yesterday, right? So I think if you go back through last non-farm payrolls at the beginning of December, I told you the yen was going to get strong by the end of December, faux show, and that January would start out very, very strong for the yen, right? That the yen would get very strong by the end of December, and January, the yen would be very strong. Can anybody confirm that last non-farm payrolls, we talked very explicitly, very openly, very candidly, very clearly. The yen was, by the end of December would be strong and January would be very strong. Can anybody confirm that? Hero or zero, guys. Get ready for it. If you want, you could even move your stop and lock in half of that. What do you care? If it turns green here, you don't want to leave it. Jim says, sure did. Do we have any other confirmations? Juan says yes. Hoorah! Ron says, yep, you did. Our line in the sand's holding, guys. Get ready, bulls. Bulls, get ready. Bears, like I said, might as well lock in some profit. This is a monthly pivot. It can bounce there, but I thought I saw a bigger support just below it. Jim says, you were spot on, Wayne. Well, thank you. Highlander says, I remember. Forex for Life says, I can confirm. Michael says, yep, I confirm. Kevin says, third week of January. No, well, the third week of January, the yens will weaken. What? Yeah. Once again, if you want to work with me, visit tradersway.com, open a trading account. Even a demo account's fine. Just get the relationship started. The table's set, the candle's lit. bloop, 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 pouring you a nice glass of wine, swing on by. I'll work with you on Monday, and on Tuesday, and then Wednesday, and on Thursday, and then Friday, and Monday, and Tuesday, and Wednesday, Thursday, Friday, and Monday, Tuesday, Wednesday, Thursday, Friday. Just thank you for being a client to Trader's Way. Yeah, Marina says this is where it may bounce, as you say, where there might be some buying. That's why I said move your stop and lock in some profit. So your stop was up here. Then we moved it here. Then we moved it to break even. And now we're down into here, a small win. And this is that line in the sand we talked about in the PowerPoint presentation, where if it bounces, we're probably going all the way up. It's that important. If this turns green here, we'll probably head there. It won't just be a little bit, it'll be a lot. Smart says time to buy. Well, I didn't say that. What I did is I said, if it comes down into here, look for a reversal. And you'll probably end up buying at the same price that you're now, except you'll buy it after the reversal. And I do that to try to mitigate my risk. Okay, remember, my number one goal is not to lose money. So, right? So in that case, if you were going to do this one, maybe you could call it like double bottom, higher, high, higher, low scenario. But I still don't like doing that in this case. Okay? So, if this turns solid green, I'm just telling you it's significant. It doesn't mean buy. It means not to continue selling. Like, you wouldn't want to sell here, and you wouldn't want to sell here, and you wouldn't want to sell here, because people get like that, right? They keep selling the retracement. What I'm telling you is based on, 153 non-farm payrolls? Well, probably more like 175 non-farm payrolls. If it bounces here very often, I see it do that. So don't keep selling. That's what my experience tells you. And the real buy zone isn't necessarily that, but we'll see down in here, okay? Wayne, what is the increase in yen in the beginning of January and decrease? Oh, my experience, Jacques. My experience. And by the way, Jacques, I told you that last year, and I told you that in 2016. I was in the Caribbean meeting with the central bank. I have a three-piece suit on. There's a volcano behind me, and I had a suite at the Four Seasons Hotel. And I had to move everything to try to get the lighting. It was so bright outside that I couldn't, even with all of the lamps. I moved the lamps and everything. And I took the light, the shades off all the lamps, and I turned all the lights on. And in the video, I'm still very dark because it's so bright in the Caribbean. But anyways, in that, and this is back in 2016, I believe it was December 12th, 2016, I did a 1-hour interview with FX Street. I was supposed to do it with 3 other experts. They all flaked. So I'm the only one that did it, and I'm the one in the Caribbean. And I still did it. So I did this interview, and it was December 12th, and I said, look, I've been long Japanese yen pairs for about 3 months. This is what I'm saying in 2016. I said, I've been long yen pairs for about 3 months. And sometime very soon, maybe even today, I'm going to cash out of all those long trades, and I'm going to short all the yen pairs. And I'm going to keep doing so until the 3rd week of January. And then there's going to be a false rally. It'll go up for 4 or 5 days, maybe a couple of weeks, I don't know. And then it's going to fall again. And I went through the whole year like this, very candidly, very openly in the interview. And it was that day that the market topped out and all the yen pairs started to slide down, and they continued to until the third week of January. Right? So it comes down to why, Jacques? My experience. Is it on your chart now? No. Is it a fundamental play? No. Is it my alpha? Yeah. So go look at it. I think it was December 12th, 2016. The yen pairs have been going up for 3 months straight. And I said, I'm getting ready to dump everything. Not just that day. Then I'm going to keep selling. Now I'm going to go from getting long to getting short. I'm going to keep selling all the way to the end of the year, all the way into the new year, all the way through non-farm payrolls in January, all the way down to the third week, and then I'm stopping. Go look. Well, yeah, but Jacques, I'm not going to hand you that on a silver platter. How about this, Jacques? Open a live account at tradersway.com. Work with me every single day. And over the next 2, 3, 4, 5 years, you'll have the experience and the knowledge as well. Is that it? Oh, you got the mini version. Beep. You got an edited version? I didn't know that. Get out of here. Beautiful. You spend all your days waiting.
Okay, and then in terms of levels, so I mean, we're 118 at the moment. That's a strong area. Plenty of offers above 118.50 by the looks of things.
Yeah, by the way, I think he's in Guatemala.
We're going to be buying into yen. But how far?
And I'm in the Eastern Caribbean.
Because I mean, we've had a huge upshoot, right? So usually, markets like
what kind of idiot wears a three-piece suit in the Caribbean?
Those spaces on the charts. Where do you think this could come back down to? And remember, we are in an era of strong dollar, fundamentally, right? Because there's a huge shortage on the offshore market of dollars, right? So we're in an environment where interest rates are going up and yields are going through the roof. So where do you think realistically the yen could get to?
Well, okay, so right now people are still buying yen pairs. Right? They still want to make money. They want to make money all the way to the end of the year. They want to take profit, really ideally in January. So these psychological levels are reachable. All right. And the only thing the technicals will tell you is that they finally are chickening out. Whether that means in December they need to cash out before a drop, or it's in January. Okay, but it is coming because they want to take profit. So. A big psychological level is a great catalyst for that to happen because people can just say, I'm out, right? And especially if you're like a hedge fund trader or a banker somewhere and you have a goal for the year, if you hit your goal so that you get your full bonus, you don't want to screw your bonus up, right? So if you've hit your target and your goals, right, you want to stop.
Yeah.
Because you don't want to mess that up, right? So whenever all these things happen, but we're talking about human nature now. We're not really talking about supply and demand of currencies on the short run as far as when this is all. It's just human nature. So if they freak out in December, my charts will tell me. If they can hang on till January, then I'm going to expect the yen strength. And when I see it, I'm going to buy yen. But here's the thing, and you bring up a good point. Dollar's probably still going to be strong because the fundamentals haven't changed. Mm-hmm. So it all begins with profit taking. So if I'm long USD yen right now, I'm going to take profit when the market does its pullback. right? The first lower low, I'm out, right? And then if you want to speculate now, because the whole thing is profit taking, that's what happens, especially the big institutional investors. So when we see that coming, great. But we're also speculative traders, right? We want to make money today, income, not just wealth. So on the way down, let's say through January, as I'm selling yen pairs, I probably won't sell USD yen. USD yen will probably come down.
That sounds like me.
Higher risk and lower reward, but I'd probably be happy to sell pound yen, euro yen without any problems, right? And if we're worried about Australia, that's going to happen next. And then Kiwi, you got to worry about Kiwi because of the higher yield differential. So, you got to pick and choose, find out what's weak at that point and sell. I mean, maybe it's Turkish lira yen.
It's weird looking in the past.
I'll be buying lots of yen against anything weak.
Wow, that's cool. Yeah, thank you, moderator. Oh, yeah, that was cool. So you have to put that in context. All the yen pairs have been up for 3 months straight, and I'm sitting there talking about dumping the whole thing. Now, it didn't get into the third week and stuff, but it's there. That interview was an hour long. Like a boss. Boom. That was cool. 3-piece suit in the Caribbean. What a buffoon. Cool. Well, Oscar Mike, let's look at all dollar pairs. Wow. Okay. Let's just go through some of these things, right? So Forex is just a random walk, and there's no way you can predict these moves, right? That's what they tell us. Seems like it's reacting to very logical areas, though, doesn't it? Right. Well, I'm not the smartest guy at Harvard, I can tell you that. Dude, I think I have a theory about Harvard. Sometimes the classes are so difficult. They're impossible. They're impossibly difficult. Some of them, not all the classes. But some of the classes, like that macroeconomics class I took, was impossibly difficult. But I think they do it on purpose. So I think something like 75% of all the students in the class got 60% or less of the possible points. That's a C minus. 75%. And then it starts really dwindle, right? But there was about, I'm guessing, I think it was about 5 people out of 150 kids. Because I'm older than the professor. But there were about 5 kids. They're 20 years old or something. They don't know anything about macroeconomics. I've been studying macroeconomics for 20 years. They show up. They damn near got 100% in the entire class, including the midterm, the final. They're getting 100% on the final, 100% on all the homework. And I think what they do is they're trying to find those kids, not the smart kids, the geniuses. And I think they show up with some secret government program, you know, and put them in doing like crazy research and stuff. Like, because what do you do with a kid like that that's 20 years old, can take a class and be smarter than someone that has 20 years of experience? I mean, like, oh my God. And I don't think they had any idiots, you know. Well, I don't think there's any idiot at Harvard, right? So it's like, dude, when you're smarter than everybody else in the room and you make it look easy, like it's easy to you, my gosh. So no, I am not a genius, but I do have more experience than most of you guys in trading. So I'm doing my best to share, is all it is. So anyways, one of the things that a lot of people miss, they don't know how to use pivot points, and it's a big part of my trading. Okay? That is a huge combination. Okay? Let's say you bought my book 10 years ago. Okay? Imagine you read my book 10 years ago. And I'm teaching you pivot points. It says if this is the top of the market, okay, this is going to be the bottom of the market. Did you know that? 10 years ago, I wrote that in a book. So I actually wrote it 11 years ago. So like 14 or 15 years ago, I knew what this meant. And it meant the market is likely to fall to that price. I'm not making that up. I don't think I even have a book. Huh. I don't know where a copy of my book is, but you can even look it up on a page, and it'll tell you if that's the top, that's the bottom. Look at that. Okay? And do you want me to blow your mind away? Blow you away? Blow your mind? How many people can tell me what I've taught you in regards to pivot points if you hit your target early in the month? And I think you would agree like the third day of the month is early. What is the next prediction? If you hit the target, which is this is the target. If you hit that target early in the month, what is the likely reaction? Well, Henry Yetta says gold is dropping. Well, we already know that. Dollar is strong, Henry. Greg says, want to call where it's going again like last month? Yeah, sure. Huh, that's actually very interesting you say that, Kingley. That's not what I meant, but counter trend back to the central pivot point. Did you know that? Look at now everyone's saying it. Yeah. CPP, central pivot point, central pivot point, central. Yeah. Central pivot point. This is what I've taught people, guys, that if you're here and that's the top of the market, you'd be a bear, you'd sell, you would take profit here, and if that happens early in the week, so if that happens at the end of the month, forget it. You don't do that. If it happens in the middle of the month, nah, you should probably forget it. If it happens in the early part of the month, then it's likely to go back here. It looks like about 24 of you guys have that knowledge. But what about the other 200 people or 600 people? Okay? If you want to learn how to do that and more, fxbootcamp.com. Go to the intermediate course, which includes swing trading and day trading. And you also go through that performance coaching I told you about before that I took myself through 20 years ago. So you'll be assigned a personal coach just for you and that coach. Meet one-on-one, very intimate, very specific, no PowerPoint presentation. That's at the end of the sales pitch. If you don't know, now you know you don't know, and you better come up with some plan. Okay? All right, so I was hoping to catch a retrace. It's happening here. Now, the interesting thing is where it started, huh? Oops. Okay, where it started. And it's the just going back to exactly what I said before. Okay, that's if you are a bear. Okay, that's your target. If you're a bull, I already have it marked here, but I got to bring it across. Actually, that's too much. Okay, I got to bring it across. If you're a bull, this is where you want to go long. Or I shouldn't say it that way. If you're a bull, that's where you create bullish trade plans, and you need to confirm your entry with price action. If you're a bull, I'm not telling you to be a bull. If you're a bull, that would be a valid, logical trade plan. It's on the 4-hour neutral zone, so it's a 50-50 whether it works or not. Okay? But if oil's going up, CAD will probably strengthen too. Okay? So that's for bears. And so a bear would expect like down, up, and then probably down, then up, and then down. Okay? So you could sell here, sell here, sell here, right? Okay? And then take profit here. Okay? If you're a bull, you don't think that's going to happen. You're going to use this old resistance. It's going to become support. I call that a role reversal. And a bull is going to look to buy here and should be very cautious at this place because that's where bears will sell. But is hoping to maybe, let's say, double bottom, higher high, higher low, higher high. So a bull would maybe buy here, definitely buy here. And then up here, I don't know anything. So again, at least take profit or jam your stop. Great tip. Hey, my bad. Right. Cool. Okay, King Lee says, is it true John Bollinger never even used his own indicator? Well, there's lots of people that use Bollinger Bands, and they're like, some experts even use 2 or 3 of them in combination. And you hear things like from other people, they say, hey, ride the band and stuff like that, right? If you talk to John Bollinger, he's like, I never said that. And so there's people that use them in ways that, let's say, are maybe unintended, which may be totally fine and valid, but certainly not. So if I don't know anything about John Bollinger never even using his own indicator, but I could certainly confirm that people use Bollinger Bands in ways that John Bollinger never intended. And I've never bought into this idea that if it, let's say let's say you use 2 standard deviations, 3 standard deviations, and 4 standard deviations, and price is this way. And price goes up here, and you say, well, 92% of the time, price stays within that, and 82% of the time they stay within that. So therefore, it should do this. I'm not a big fan of that. That doesn't fit with my personality. I've learned the other way, where the market tends to go wherever the hell it wants to go, no matter how standard or unstandard it is. That's sort of like betting on a freight train to say, hey, this freight train can stop in time and won't run me over and kill me. So this idea of like riding the band and all that kind of stuff, John Bollinger never said that. So I've used Bollinger Bands over the years. I used to have a trade called Not in a Million Years trade. And this would be an example of a NIME, not in a million years. I don't really do that kind of stuff anymore. Let me show you what I need. Okay? So there's a lot of stuff on this chart that I've been using for 20 years. I don't need a lot of it anymore. It's not to say they're not important, but I don't need them. There are much more important things. So let me show you what I need to trade. Okay? Oh, by the way, while I'm doing this, how many people would like a copy of my charts, my chart templates, all my indicators, and all of these profiles, each with their own charts and templates already pre-installed? So that's like, I don't know, 150 charts and all my indicators, including pivot points, including moving averages, and all the colors are already set up, and all the templates and all that kind of stuff. Would anybody like that? It's charts.fxbootcamp.com. It's a free download, bada bing, bada boom. And I'm sending out, I forgot to do it yesterday, I'm sending out to whoever has previously downloaded my chart templates. I'm going to then send a separate email, and I'm going to give, what was it now? Oh, somebody wanted the dollar indicator for your charts. I'll send that to you for free. You won't even have to go to a download page. It'll just download from the email, I believe. But anyways, compliments of the firm. Okay. So anyways, let me show you what I need. And everything else is not necessary. Okay. This is what I need to trade Forex profitably. Everything else is nice to have. It's nice to have oscillators. It's nice to have moving averages and all that kind of stuff. It's nice to have Bollinger Bands sometimes, but they're not necessary. If you took any of this away, I can't trade profitably. Michael, I did. I sent it out. Now, I noticed like only, trying to think, I think only 60% of the people opened the email. So, and then from that, maybe only 30% downloaded it. So I guess I'll send it again. Oh, thank you, FX Street. Thank you, moderator. All right, so what do I have here? Okay, the first part of this is I have to have price action. Okay, I need to identify using price now, price and time. So this is price, this is time. Okay, using price and time, I need to be able to identify where price has been over time. Okay, and I'm looking for places in which price was important. Okay, and that helps me identify support and resistance. So I go through my charts now and I say, based on price action, there are key levels here that seem to have been important and may be important again in the future. And I start marking these things, okay, so that I can trade with price action. Okay, there's many more than this, but You can definitely see those. And then, of course, you can see this was important, so I will drag this across. Okay? And in the future, for example, I might contemplate having a trade like if it moved from here to here to here, okay? This would be a buy zone, this would be a sell zone, okay? So that's the first thing. I have to have that for price action. So the number one requirement is you need to know how to trade with price action. If you can't do that, you're going to fail. Do you need Elliott wave? No. Do you need Gann fans? No. Do you need Bollinger Bands? No. Do you need RSI, CCI? No. Stochastics? No. MACD? No. Moving averages? No. You don't need any of that. If you don't know how to trade with price action, you're going to lose all your money. Because you just don't know how to trade. You don't even understand the simple, basic process of which people are making decisions. You just don't know how to trade at all. You're just running around with a gun and no bullets. You're like, I got an RPG. I'm gonna blow stuff up. Like, dude, you should have a rocket shell in there, right? Like, you just don't know the very basics of the very basics. Okay? So that's the first thing. Number one, you have to know how to trade price action. The second part here are moving averages. Or not moving averages, pivot points. So what does it all mean? Well, price action is identifying support, and I'll just do it this way, support and resistance based on previous price action. So if this was important in the past, and this was important in the past, maybe in the future, this will be important too. This was important in the past, this was important in the past, this was important in the past. Guess what? It was important here, which was future, and it was important here, which was future, and maybe even again in the future, it'll be important again. But when you trade, for example, this is a breakout, this is a retracement, this is a buy. All day long, and you need to know price action. If you don't know that, you're just not going to be successful. I don't care what indicator you have, you're just going to fail. That's how certain I am about that. You have to know how to trade. And this helps me identify where bulls are going to buy and where bears are going to sell, but also where bears are going to sell and where bulls are going and where bears are going to buy. So if you can't figure out what the other guy is going to do, you're not going to be successful. You're all tactics, no strategy. It's just not even going to work. Okay? So you need to know that. Okay? The second part, okay, so let's do this again. Number one is price action that helps you identify support and resistance. Okay? Now, the number two thing you have to know is market forces that identify support and resistance. And like in the previous presentation, like in the PowerPoint presentation at the beginning of this event, I showed you how I use multiple things to separate price from market. Once again, we're separating price from market. But notice that both things are identifying support and resistance in the future. Future. These are leading indicators. Yes, they look to the past, but they're calculating key important price levels in the future. If you cannot predict the future, you will not succeed as a trader. Okay? So I have to have these tools. Okay? So I can confidently say if you're a bear and you shorted here, this is your target. Okay? But I also know the bullish side. If you're a bull, this is where you're going to buy. Okay? And if it does this, you're going to knock the bears out of the market and you're going to get paid. Done. And I already know where the bulls are going to go. I know the price. You can't see it on this chart, but I can easily provide that for you. Okay, but a bear should also know that this is where they're going to be challenged, and a bear is hoping for this, and the opposite's true, and we blow through all these bulls, and that's that. You see what I mean? So that helps us. Like, this says that's a sell zone, and in the future, this is where you should start to take profit. The profit of profit. When I first started trading Forex, my wife bought me a license plate cover, the frame, and it says the profit of profit. Or no, just profit. I have it somewhere. The profit. It was funny. Hey, Michael. Yeah, that'd be a symbiotic relationship. Okay? So anyways, cool, right? So there are two forces going on here that are both using price. Oops, I lost my drawing tool. Let me fire that sucker back up. There we go. If you're a bull, that's your trade plan for the month of January. If you're a bear, that's your trade plan for the month of January. Bear. Oops. Bear. Bull. Okay. Who's going to be right? Well, we don't know. I know where they're going to buy and I know where they're going to sell. So you can use this on a longer term trade, or you can use this for scalping. Because you can predict the future now with reasonable accuracy. Okay, bears are thinking this. Changing color here. And bulls, bulls are thinking more like this. Okay? One of them's likely to be right. And you can put trade plans here and here, right? You can trade both ways, like a broken gate on a small time frame, where you could buy here, then you got to worry about this, but if it breaks, then you can do this, and then you could expect that. But if it pops up, now you got a breakout type strategy. And you can put lots and lots of little 15-minute trades on this, but you still have to understand price action and pivot points. And if you cannot do that, you're going to struggle for a very, 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 very long time, because you can't predict the future. You're only looking in the past. Past performance does not predict future results. Okay? So I'm begging you, I'm imploring you. Now that you know that, you need to go out and find some knowledge. You need to know price action and pivot points. All right, let's go here. All of them, actually. So we have at FX Bootcamp, there's a day trading group that trades London and New York. And then there's a weekly and monthly swing trading group. So like Sunday afternoon at 5 p.m., the swing trading group's meeting, and we're setting up trades for the week and probably, that kind of stuff. So we'll be in trades. Typically, we do that on a Friday like this so we can front run swing trades. But NFP messes that up, right? All right, by the way, I got to go back here. We've hit our target. We've made the easy money. High five. The easy money's over, guys. Boop, boop. Price action says be very, 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 very careful here. It's just price action. It's not me telling you this. It's just the chart. Okay? And remember, plan A for bulls are here. Plan B for bulls is here. And this is definite. This is definite. This is a maybe. That's a definite. That's why it's plan B. Okay, that's your Alamo. So anyways, you made the easy money. You're straight into the target. It's up to you now. You just did a 618 1382, and that's perfect. Right, guys? Right? Remember, a 618 to 1382, that's a perfect fib move. Good job. After this, I don't know. It's up to you. I don't know what's next. That's the logic, easy, low-hanging fruit. It's up to you. Maybe you make more money here. Maybe you screwed up from here. That's up to you. Cool. So now you know how to scalp. Let's move to oil. I have this. I started talking about buying oil at $44. Okay. Can any Traders Way clients confirm that? We had a very logical, probably a half an hour discussion of buying oil at 44. We'll zoom in here. 44. Get your 44 here. 44. Get your 44. Marina says true. Mathilahan. True. Yes. Sati, true. Stephen, true. Jim, yes. Yes, yes, everybody. Cool. Nice. See, if you're a client to Traders Way, we have long discussions about such things. And I actually tied this into emerging markets and the Fed. What was the other one? Oh, debt prices, the pricing of debt globally. Yeah, you know, simple stuff. Cool. So now what? Okay. Well, if you are a bull on oil, the projected conservative target for the month is 56. You are going to be challenged, however, as a bull. You are going to find huge challenges at, I guess it's $50. It's actually like $50.50 or $50.35 or something. But you're going to get up here and there's going to be a massive challenge. But a bull is going to try this, okay? They're expecting the challenge. So maybe if you did buy down here, you take some profit. And then it comes down here and you buy it again. And then it breaks to a higher high, which then you buy a dip. So there's 3-4 trades in here. But that's what bulls are thinking. Now, the reverse of that, a bear, oh yeah, because I just described it, right? A bear is going to challenge right here at $50. And they're going to bring it down. They're expecting a lower high, lower low, lower high, lower low. Okay? And if that is the case, let's say they're right. Now, I don't think they're right, but anybody can argue anything, right? Let's go to, that's a 4 hour. Let me back out. It's not even giving me the data, so let me back in. Let me do it this way. If bears are right, we're dropping down to $38.35. That doesn't feel right to me. But that's what a bear is thinking, okay? Anyone that believes it's the end of the world right now, they're thinking this. I think even on top of what we're doing, based on my assumption of a third week rally and all that kind of stuff, I have a feeling it's going to do this, it's going to do this, right? And then it's kind of going to do this, this, and then that. Maybe not even that. I think maybe the top, maybe, is this. You spend all your day trading your second chance. Pivots in your past. Okay. Michael, you're welcome. Yeah. 9:30, stock market's open. Ding, 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 ding. Sir, I received the email to download the pivots and charts. Good. Back in 2008. But yesterday I wanted to download it on my new laptop. It's not available to... Yeah. Well, you already know that go back to your African Queen. You open up your email, and remember that email you got with the link to the download page? Click that. Go to the download page and download it again. You don't have to go through the process again. You already have the link to the download page. Return to the download page and download it. Okay? But the download page is still available, Michael. It's not like you have to move it to a flash drive. Just download. Go back to the download page. Okay, cool. So that's that. We have a lot of macro levels. So here's what the stock market's going to do, I think. So we've had this big decline. Then we're going to do this, and then there's going to be like this, and then there's going to be like this, then there's going to be like this, and then this, and then it's going to tighten up by June. So this was December. This is sort of January. I guess I should do it down here. December, January. This is more like February. No. Shoot. Let me do this in a different color, because I can't erase that. We'll do blue. So that's December. Okay, that's December, January, February, March, and this big one's April, May, and then the June Fed meeting, June, and then this is going to be July and August. Okay. All right, so that's the S&P 500. So if you understand macroeconomics or risk on, risk off, you can put together various trade plans along the way. But remember, the stock market's completely unpredictable. You say, really? Is that why I have to pay you 2% of my net worth? And when things collapse, you're going to hedge me? No, that doesn't mean anything. Baby doll, what defines major key? Well, that would be the price action and the pivot points that I showed you. It's where people decide to buy and sell. So, like, look. So my book is called Strategic and Tactical Forex Trading. So it starts with strategy. And every professional trader has a strategy. And I don't mean like you trade 5-8 crosses. I'll just put strat, okay? And what they do is they look at like 4-hour charts, daily charts, whatever. But there's also macroeconomics, okay? And there's also seasonality. Okay? And there's business cycles. You take all that up, and it tells you whether you want to be a buyer or a seller of whatever asset. That's the strategy. Should you be buying the S&P 500? Should you be selling the 10-year T-note? Should you be selling gold? Should you be buying dollars? Should you be selling yen? Should you be buying CAD? Should you be selling Swissy? These all come down to the same thing. Okay? Is oil going to go up or down? It's all the same thing. And that comes down to your strategy. Your analysis tells you, are you a buyer or are you a seller? And you make your decision. And one decision here on the macro level based on all this stuff gives me all those other trades. I don't even need to look at a price. I don't even need to look at a chart. Okay? One decision for all. Okay? But now I can correlate that. So if I'm selling dollar, I'm buying gold, for example. If I'm selling yen, I'm buying oil. Okay? If I'm buying the stock market, I'm selling the bond market. It's just like, so my point of view of the global market is based on Newtonian physics. And I see clockwork. It all works together based on logic. So if this is going up, that's going down. And if that's going down, that's going down. And if those are going down, that's going up. And it's all Newtonian physics. Newton. It's mechanical. Okay? By the way, I discussed particle physics yesterday in Trader's Way webinar to discuss using aggregate data to take something unpredictable and make it more manageable, right? So the borrowing from chaos theory and particle physics to understand the way the markets work. Cool, right? So anyways, I make a decision. Did you guys get the sales pitch? Like, it's an appeal, right? It's not even a sales pitch. Please visit tradersway.com. Please open an account, even if it's a demo. Takes you 30 seconds, and then gives me an opportunity to work with you every single day. Because in your back office, when you log into your back office, it shows you your account and stuff. There's a little button that says live webinars. Please swing by. Just please swing by, okay? All right, cool. So once you got the strategy set, then you use your tactics. Strategy, strat, tactics. And that's where I open a chart and I look at price and I look at time. The price-time continuum. Okay? See what I mean? And from there, you're identifying levels of where buyers will buy and where sellers will sell. But remember, that is based on their strategy. But there are things that you learn, like price action, for example, that confirm. So let's say the trend has been down. Okay? Let me change colors because there's so much blue. Okay? Let's say the trend has been down. I think you'd agree with that, right? The trend has been down. But your strategy says, based on your analysis of macroeconomics and central banking policy and long-term charts and all these different things, you say, well, it's fallen far enough. From $75 a barrel to $45 a barrel is enough. And that at some point, price is attractive to you. You want to strategically be a buyer based on your strategic analysis. Okay? And you say, okay, now I need to look at a chart and find out what that price is. Okay? And you start looking for things like price action, support, and resistance and stuff. And you'll see here this was interesting, but way back here, like 2 years ago, it was an interesting price. Or 4 years ago, it was an interesting price. So you're like, this might be interesting. And then you use, okay, that's price action. And then you use market forces, and you say, oh, well, based on market forces, that is the pivot point in which I would want to be a bull. Okay? So you combine this and you say, oh, right around $44, based on my strategic analysis and my technical analysis. The technical analysis tells me right around 44. If I'm going to be a bull in a bearish market, that's the first place to look. Now, technical analysis, like based on price action again, says the next thing is, well, bears are going to sell here. We know that. And there's probably going to be bears here because it's been bearish for so long. I think a bear is going to try again. Why wouldn't they? So I would expect a bear to be here. But remember, my strategy is bullish. So buying here was a first move. I wouldn't be shocked if it came back down. So this is why I need to move my stop. Why do I need to move my stop? I know there are bears there. How do I know? Because I know how to trade. And if I was a bear, I'd sell hard. I'd fire for effect. Boom, right there. But I'm not. I'm a bull. But I know bears are there. So I got to manage my risk, lock in some profit or something. And then if it doesn't go up and up and up, and I don't think it would go up and up and up, but if it did, okay, that'd be great, and I'd hit the monthly target. But what I think is actually going to happen would be more like a double bottom, and then we wipe the bears clean off the face of the earth. And now I can trade something called a double bottom, which is price action, right? It's a reversal. A double bottom is a reversal pattern. In a market, I'm reversing. So how can I not take that? But if you're stuck on a 15-minute chart just looking at moving average crossovers, you're missing all of that. You're just totally missing all of it. You're not even in the market. You're just like a mosquito. You're like, right? You're a mosquito on a Nobel Prize winning economist's neck. And they go, what was that? Oh, it was nothing. It was just a retail trader, right? Like, come on, get in the game. Be a pro, man. The strategy, right, using macroeconomics and then breaking market and price apart so that you can align a strategy with tactical market conditions. You put them together, you become a significantly better trader, in my humble opinion. I don't know what you're going to do, but that's up to you, right? Does that make sense, guys? I hope it does. Nice little trade this month, huh? Doesn't always work that way, but this one worked out perfect. Here it comes. Whoa, be careful. So, like, if you're really going to analyze this one, remember I said this is where a bull would buy. Here's what a bull is doing. You ready? A bull is going to mark this. Okay? And I think a bull would mark that. So let's make plan A and plan B. Okay? A bull is going to do this. You ready for it? Okay? A bull is going to do this, do this, do this, do this, and do this. And a bull would buy here. Come on, I'm supposed to circle it. Come on. Okay, a bull's going to buy here, and a bull's going to buy here. Yeah, but I told you this an hour and a half ago. Okay? Now, the reverse of that is price action. So the price action course at FX Bootcamp is like $79 or something. Practically a giveaway. How do you trade price action, you say? Down, 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 up, up, sell. Down, 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 down. But how do you predict the up, up for the next sell? Old support becomes resistance. Up, 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 down, down. So when you're down here, you don't know anything to the right. So you look left, you grab this, and you drag that across. Somewhere in there is going to be your new sell zone. Sell. And then what? Slowing down, guys. Why is it slowing down? I mean, it can still do this, but why is it slowing down here? Because it was obviously support. Okay? If it falls here, then we're dropping to plan B. Remember where bulls are going to plan A or plan B? A bull hasn't had an entry yet. You have to be clear on this. A bull has not had an entry yet. So if this doesn't go up and give them, this kind of play, then they're going to look below. So what does that mean for bears? Price action. This used to be support, so now it's resistance. And then let's say you're down here. Well, then you drag this across. This used to be support. And then your next trade is going to look like this. And you keep doing that until what? Until you get here, which is our bullish plan B. So bulls certainly have not had an opportunity yet. So now bears are probably going to sell, and then take profit. And then bulls could look for their double bottom here, or right, a reversal pattern at obvious support. Okay, looks like our bears, now maybe because the wage growth is so bearish, well in this case, bullish for the U.S. economy, bearish for this pair. So we could just do this, right? Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, right? Look at this. Drag it across. Sell. Down, 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 down. Let me use the drawing tool. Drag this across. Sell. Down, 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 down. Drag this across. Sell. Down, 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 down. Drag this across. Sell. Down, 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 down. Great. Drag this across. And in the future, it may do this. And what do you do now? Probably sell. Then you're down here. Then what do you do once you have a lower low? Mark it. Drag it across. That might be a future sell. That's price action, guys. You have to understand how price works. And you can scalp that all night long. So like if you know the basis of price action, you can scalp, you can spot, you can swing, and you can carry trade. Okay. Is anyone here going to join the swing trading group so you can meet with us on Sunday? Sunday, 5 p.m. when the market's open, I'm planning the entire week for swing trades. Swing trade, by definition, is somewhere between like 150 and 300 pips. Well, Def Turtle, actually, that's quite easy because then what happens is, right, if you're trading like this, and then this happens because something unusual happened, like this, what happens? You get stopped up. So if you have a stop and it's 25 pips away and it jumps 300 pips, and you lose 25. But you made 25 here and 25 here and 25 here, and then you lost 25 there, and you're like, it's just another trade. Jean-Guy is, right? Jim's going to be there. Andre's going to be there. Cool. Steven's going to be there. How do I join? FXBootcamp.com. And you want to click on live day trading and swing trading group with performance coaching. That's how you join. Okay? And we work every London session, every New York session, every weekly swing. So Fridays we front run our swing trades. And then every month we do monthly trades. So it's scalping, it's spot, it's day trading and swing trading basically. But within day trading, you get your 10 pip winners, your 25 pip winners, your 50 pip winners, and maybe 100 if you have a big day kind of thing. But then you fold that into every London and every New York session. You're setting things up, right? But then the swing trades are that group it's a different strategy, right? So those are going to be 100 to 300 pips. And then monthlies are more like 250 to 500, right? We're planning things for the entire month. Do I trade breakout candles? I don't see why not, baby. So anyways, fxbootcamp.com, guys, for that. Beautiful release. Yeah. End of the day. It's almost 10 o'clock. Beautiful release. Boom, 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 boom. You traded gold? You got any gold bugs here? So this is a meaningless drop. So we'll see how long it lasts. This is not an important level on a monthly basis. It's an important level on a weekly basis. So if I were me, I think we already covered gold, right? Because I look at this and I say, oh, this would be a buy zone. But then I notice it's a 200 EMA. And I realize I already covered it. So I think there's more buyers here and then there's more sellers here. But and it's more of a weekly play. But this tells us neutral. It's 50-50. That's the neutral zone. But you still have to, generally what I do, because I'm a trend trader, if I had to bet, I would bet on the trend. So I'd have to assume something kind of like this happens again. Okay. Doesn't have to, guys. It certainly does not have to. But this is not, on a monthly basis, this price is not that meaningful on a longer term basis. I understand that we had an NFP, and NFP brought this down. There's some dollar strength and stuff. But if anything tells me the dollar strength's short-lived, or we did an overshoot. So I think I would have to be convinced a little bit more technically before I got into that. See, fundamentally, I believe it. So remember when the Fed funds future market priced in 4 rate hikes in 2019? And then something happened in like the October Fed meeting. They changed some things and people freaked out, and it went from 4 rate hikes to 1. So I was telling people 4 was too much. We knew that at the time. And then 1 was too little, and we knew that at the time. So the market freaks out, overprices one way, and then overcuts the other way. And it's probably 2, but even under current market conditions, maybe more like 3. So what we're seeing here is that there's a lot of dumb people that manage money. And they go from like dumb 4 to dumb 1, and now they're just kind of figuring things out. And everything gets repriced and rebalanced and all this kind of stuff. And it proves to me that the world needs you so that you can manage other people's money. There are tons of wealth managers making $400,000 a year, managing grandmother's pearls that do absolutely nothing, especially when the market falls apart. They don't hedge or anything. They just collect 1% assets under management and make $400,000 a year. And they're by and large, not even business majors, not even economic majors. They probably have a communications and marketing degree from some third-rate university, right? but they make $400,000 a year doing nothing. So we got to get rid of those guys and get you in those jobs and actually manage their money. So I think now we're going to go, we overshot this way, we overshot this way, we're moving certainly here, but probably even here, okay? Because 2 days ago when I did the conversation with clients, we talked about how there's still growth in the United States, there's still inflation, so just to keep up at the inflation level, to keep it neutral, we have to raise interest rates just because it's a moving target. So you're going to have to keep raising interest rates. Well, this new information that our job market's even tighter than we thought, and wages now are going up. We've been waiting 10 years for this. Wages are going up. That moves the big eye, remember? That moves the big eye more, so the little eye has to move too. So that goes from, it wasn't 4 ever, certainly based on old data. And then it dropped to 1, but that, what does that mean? The market, it's the end of the world? No, it's just Europe is a problem. Europe is the problem, not the United States. So anyways, so 1 was wrong, and now we're thinking 2, but we already knew 2 because you have to do the second rate hike just to keep big I equal to little I. But now with this new information, I'd say almost 3. I'd almost say 3. There's 1 in January, right? January, June, December. Boom! I just hit you with that. That's real knowledge. Okay? January, June, December. Rate hikes. That now has to be priced in. Okay? But does that mean here, guys? Or does it mean, okay, that's one scenario. The dollar gets strong, ridiculously strong. Or second scenario is this. Off to the races. Continue mission, right? The third scenario is a slight repricing. So you get an up, a down, and then we'll say off central. We'll say that it could be this. To me, it's kind of the same thing. So that's 3 scenarios. So guess what? Here's what your job as a trader is to recognize there's three possible scenarios. Okay? 1, 2, 3. And to start creating trade plans. What are you going to do if it falls further here? Well, if it falls further, that plan is gone. So now there's only this or this. So now you're going to be very concerned about this price level. And then you might want to short down into here. Then you got to be careful of taking profit here. I don't think we're going here. So here's what I would do. I'd say I don't think there's a chance in hell we're going that far down. And we can investigate that if we do get down here. So there's only really plan A and plan B, right? Under current market conditions. And if we know if this drops further, now we know there's only one scenario. Okay, so let's say we go like this and we go like this. Then we start lining things up and we create a strategy. The strategy is if we're down here, I want to look for things like double bottoms, the higher high, and I'm going to buy a dip. And I would buy here. And I would fire for effect. It would be like 4th of July. If one will do, hit them with 10. Boom, 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 boom. Right? Drop some trades on these. And that would be it. I'd say that's very likely because I could see how this could gain more strength than that. Okay? But we still have to pay attention where we are now, because beyond a shadow of a doubt, let me mark this. Okay? Boom. Do you think that's a coincidence that that's a 4-hour 200 EMA and we bounced there? I don't think it's a coincidence at all. That would be correct, Michael. See, Mike says gold down another 50%. Possible, right? We've seen all kinds of things. What's most important is not Hail Mary predictions, but you're understanding where buyers will buy, where sellers will sell. You come up with plan A, plan B, plan C from your point of view, but maybe even from the other person's point of view, the other trader on the other side of the trade. If you're long, someone's going to be short. As soon as you pull the trigger and buy, someone's on the other side short. So you need to what is their plan? Where's their breaking point? What's their Alamo where they just cannot stay short anymore and they get stopped out? Well, that's where you're going to make your big money, because it's going to pop. You see what I mean? So I don't want the Hail Mary stuff and the guesses and, I think it's going to do this, and I don't care about any of that. What I want to hear from you is a strategy. I want you to be able to explain it to me. Why is it going to do this? And then next, you show me plan A. Okay, so if you say, Wayne, I'm a buyer on gold, and you give me a half decent, half reasonable answer why. Okay, you're a buyer on gold, you think the dollar is going to weaken. Great, fine, whatever. Now, you need to show me plan A as a bull, where you would buy, what that price is, and show it to me technically. And I'm pretty good at technical analysis, so you better have a solid level, plan A support, and then plan B support. And now, if you know your two prices in which you would consider, doesn't mean you pull the trigger, the two prices you would consider buying as a bull based on your strategic analysis, then the next thing is you need technical analysis to confirm or deny your hypotheses, because your trade plan is just a hypothesis. So is a double bottom a reversal pattern? Yeah. At the exact price? You're like, at that exact price, you get a double bottom reversal pattern, and you're telling me it's going to reverse? So you see a reversal pattern develop at the exact price you predicted for a logical, intelligent reason? Dude, trade it. Your trading gets so much better when you're not trading like a video game. Boo-boo, let's try this. Boo-boo, let's try that. Huh? Plans in advance. Okay? So right? So if you have a plan A, and you're like, well, plan A, I might buy it here, A. And B, if it fell further, I'd buy it here. Right? And it does this. See, you never got a reversal pattern at support, so nothing happened. You didn't lose any money. Well, you didn't make any money because you're a bull, and it fell further. Well, so what? Don't swing both ways like a broken gate. And then what? And then it comes down to plan B. And what if it does this? Well, then get in the game, bro. Okay? The opening of my book talks about the art of war. And it says an honorable general will be victorious because many plans were made. Strategy, well before tactics, right? It's not always the size of your army. Think of Alexander the Great, right? Strategy is the most important thing before your tactics. So you have plans. If you see a reversal pattern here, okay, there's all kinds, whatever flavor of a reversal pattern. As long as you're confirming your strategic plan or your strategic hypotheses with your technical analysis. Remember, it's analysis. Confirm or deny It's not just like, oh, I buy at this pivot, and you just buy it. Because now you're a degenerate gambler. I bet you anything that pivot's going to hold. Nobody said that. Okay? Your analysis confirms or denies your hypotheses. Your strategy is your hypotheses. You think gold's going to go up. Great. Why? And you spit out some garbage. Good. Whatever, as long as you thought about it. Now pick out your price. All right, well, this is a 4-hour, 200 EMA. That's your reasoning. Okay, great. Fine. Good. You think it's going to go up? You think that's going to be support. How am I supposed to know? So now you confirm or deny this with your technical analysis. If it does this, well, you didn't enter your trade, so you didn't lose any money. But if it does this, take a shot, son, get in the game. Luke, it's so funny. Luke, search my name on this site called Amazon.com. It's an online bookstore. But yeah, Wayne McDonell, or you can search for FX Bootcamp or Strategic and Tactical Forex Trading. But like, look, I'm not pitching my book. I think I make $5 every time I buy a book. So it's Wiley Publishing that makes all the other money. So you're making Wiley super profitable so that they can afford their offices in New York City. So I'm not pitching it to make money. I wrote one book, and it's considered the world's worst book ever written. There's no other book under any other subject as poorly written as mine, is what one of the reviews says. It might not be that bad, but I'm not a writer. I'm a trader. So anyways, that was 10 years ago. I just wanted to document the way my strategy. So you can buy it, you don't buy it. I don't really care. I think, when was it? 2010 it came out? I threw a party for 20, how many people? 20? 10? 5. Let's say 5,000 people. I threw a party, a launch party for 5,000 people. I printed banners all over the room and pop-ups. I did a book signing. I had fancy pens for it. It was really cool. And I bought beer cups, all camouflaged with FX Bootcamp logo. We had drink tickets. So you'd go to the bartender and give him the drink ticket, right? I think everyone got 2 drinks. So you peel off the drink ticket, and what you're left with is a bookmark. FX Bootcamp bookmark for the book. How cool and clever is that? All camouflage and logoed and stuff. So I bought 5,000 people wine and beer. And I spent more money on that launch party than all the money I've made combined from selling the book. So I don't give a damn if you buy the book or not. It doesn't affect me. But I did write my life story in there. Okay. So just in case you're like, he's just trying to sell me something. I really don't care. But if you enjoyed it, please leave a half-decent book review on Amazon. Yeah, but there's only the trolls get more than anything, right? So if you actually enjoyed the book, it'd be great if you left a review. Doesn't hurt. Yeah, right, Dilbert. Yeah, right on. All right, I have 13 and a half minutes. What would you like me to cover? How can I help you? A Euro Aussie. All right. Henry asked Euro Aussie. I missed that, so let's do that. Euro Aussie, right? I don't think I even have that. So let me just add it here. Euro Aussie. Okay. All right, Henry, are you still here? Let's confirm that. If you're not here, then what's the point? You spend all your daily. Thank you, Mike. Mikhailovich. Yeah, I did that. Yeah, okay. Henry's still here. Cool. Now, can you tell me if you're a bull or a bear, Henry? A beautiful release. Henry, are you a bull or a bear? There's a bit of a lag. Henry, yes, I'm still. Oh, wow, there's a 30-second lag. Holy smokes. All right, I'll wait for Henry because I'd like to filter through the eyes of the angels. Far away from you. All right. Wow, look at that one. Wow, what a spike, huh? May you find... Oh, we'll leave that for now. A bear, like a boss. All right, there we go. Thank you, Henry. Henri. Okay, in that case, this is what you do. You don't sell low, you sell high. This is not high, so you need it to come back. There's your resistance. There's your next target. That's probably a day trade. So I don't know if there's enough daylight today for that, but that would be the first thing. Okay? If it keeps dropping, there's nothing you can do about it. Okay? Your entry was here. Let me go on a 15-minute chart. If you missed that, there's nothing I can do for you. Right here. That's your entry. Okay? Another way you can do this, well, it ends up being the same thing. Let me back up. Yeah, it's the same thing. So maybe it happens more quickly is the only thing I can tell you. Let's do it this way. Okay, so you got to take this, drag that across. Okay, and that's your move. Okay, if it keeps falling, doesn't matter because you can't sell a falling market. You just don't do it. So that's what you got. Okay. The interesting thing is, for some reason, if this turned around, like on Monday, I'd be selling there. Okay. Plan B for a bear for next week. I'm looking at next week now. This would be plan A for next week. This would be plan B for next week. But that's not likely to happen today, right? So I don't think you'll get a front run, but you probably get one more short-term scalp to the downside. I'm going to connect this over here too. It gives you a little bit more freedom. Guess I got to go to a 5-minute chart for you. Whoa. Okay. Marina says a 3, a 2, and all that kind of stuff. Yeah, it's not the reasoning, but sure. Yeah, maybe a 3-minute delay, I guess, yeah. What is my favorite time frame? The 4-hour, the 1 hour, the 15-minute, right? This one right here. 4-hour, 1 hour, 15-minute, 5-minute, 1 minute. So I start on the 4-hour and 1 hour, and I create a strategy. Also on top of that, like I showed you, I had seasonality, business cycles, macroeconomics, central banking policy. All those things are important, and the 4 hour and the 1 hour. Okay? And then once I have the strategy, then I drop typically 15-minute and then the 5-minute, 1-minute combination for pulling the trigger. Yeah. So this is falling. It doesn't matter to me unless you're just purely scalping. But even then, this is not a scalping class per se. Okay. Nice. Nothing you can do about it if you're conservative. If you're chasing this, by the way, if you see a candle like that and then you trade, you have no discipline whatsoever. And you need to recognize that. That you don't have any strategy behind what you're doing. You're reacting to the market. So if you pull the trigger because you see that red candle, you have fundamental flaws in your trading ability. And I don't care how strategic you are, you need to address these weaknesses. If that makes you trade, you're making decisions by which way the wind blows. Okay? If you sold here, you're getting paid. You got lucky. It's moving farther than a typical scalp. Like, that's a great setup. If you now just pull the trigger short, you got massive problems, my friend. You're going to get punished. Maybe not today. You're going to get punished. And then you're going to move over to Bitcoin or something, or take an options trading course or something. But you're not likely to succeed at either of those things because you're reacting to the market and you don't have a plan or a strategy. You don't even have tactics. Forget about your yellow Lambo, okay? End of the day. Finally stopped raining. It's been raining and raining and raining. Rain and rain and rain. Rain and raining and raining. Sorry, something popped up here. Someone says Euro on the march higher, yet Aussie's marching the other way, right? So let's go back to where we started. Okay. Now, let's see how it did. This white area was the sell zone. Our target was this blue area. And I said you were likely to get punished. This was the take profit zone, right? How did I do? All of this was analyzed before the market moved. That this was our support. That's where you're supposed to take profit. That was the entry. And after this, I don't really know. This is, and remember, this was a counter trend move, right? That we discussed before the market opened, before the news came out. There's the line in the sand in which you should jam your stop. So I taught you entry. I taught you stop management from here to break even, to lock in a small profit, where to take your profit and get out, where the counter trend would be. The chart templates are at charts.fxbootcamp.com. So hopefully you learned something today. We did a lot, I think, huh? I think it was a pretty good 3 hours. It's a long time to talk, don't you think? 3 hours? But we covered scalping, long-term planning, risk management, stop placement, target placement, price action, pivot points. We did some of the macro. Oh, I did the big economic thing about teaching you, the neutral rate of the Fed funds policy, little I equal large I, and how inflation and growth can move big I. So therefore, you should at least price in future rate hikes at the Fed and the Fed funds rates and all that kind of stuff. I think it was a pretty interesting day. But not only did we get the scalp, but we nailed the reversal, I think, huh? And it's 10:30, so, Powell has probably said something, or the market's getting ready for them to say something. Very dovish comments. Yeah, okay, that makes sense. So bring it on back, right? So anyways, please visit tradersway.com and open an account. Please join me every single day in our webinars. I swear to you, I'll do my best to make you a better trader. Right? More hand-holding in intensive stuff than a daily webinar. You need to visit fxbootcamp.com, watch some video courses, join the live courses like the day trading and swing trading, performance analysis, and all that kind of stuff. So that's at FX Bootcamp as well. So there's multiple ways that I can help. FX Bootcamp, but more importantly, visit tradersway.com and get a broker that cares about you. That's okay. So anyways, tradersway.com. Thank you to FX Street for hosting me for the 153rd month in a row. I appreciate FX Street. I've been working with FX Street for, like I said, 15 years. Think about that. That's really cool, right? So I like working with FX Street, and I hope these webinars are helping you. I really do. I want you to succeed, and I hope you know that. These daily webinars that I do are important to me. They're some of the best time of my day. The couple of hours I spend with you guys is, very important hours to me. I take you on vacation. I do them when I'm sick. I take you on business trips. Earthquakes and hurricanes and thunderstorms and hailstorms and snowstorms, fires. Do you guys remember, 2 years ago, trading at the top of the Ritz-Carlton in Hong Kong every day for a week? We're in the boardroom on the 150th floor, and there was a typhoon, a class 10, the largest class, right? Class 10 typhoon, and the building swaying like this, and I'm doing a webinar with you guys when the staff and all the people in the building are running for their lives. You and I traded Forex together. You're that important to me. I want you to succeed. I hope you know that. Yeah, look at that. We're all the way back. That's cool, right? So anyways, just whatever. Happy New Year. Happy 2019. I hope to see you in the next 11 NFPs this year. And maybe I'll see you at my webinar for Traders Way clients on Monday morning, 7:30 in the morning, New York time. Visit tradersway.com and open that account now. Huh? And my charts, again, another thing I'm offering you to succeed. Charts.fxbootcamp.com. Free download. You get my templates, my indicators, my profiles. There's an EA in there. It's all there. It's just get involved. Take care, everyone. Cheers.